Check, check. How do we look? How do we sound? We'll get started here in a minute. Check, check. As well. Welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's live stream, I wanted to go through the path to alt season, do a little bit of a recap of Monday's video, and just open up the floor to discussion for any of you that are here and get into my hypothesis for this crypto cycle and how we would see alt season should it be a part of this cycle as it has been in the past. So getting over to Bitcoin right now, you can see currently it is at the 50-week moving average as well as this 1618 macro fib. You see the 1618 there, and we get that by looking from high to low on this chart from 2021 all the way down to the bottom in 2022. And so right now, the 50-week moving average, we've hit it. This is the third time so far that we've hit the 50-week moving average. And the question remains, are we going to hold support here at the 50-week moving average, or might we possibly break down lower through it? Now, that's current price target analysis. What I also want to talk about, or what I want to talk about mostly in this video, is the current cycle. All right, as far as where we are right now, what we need to see in order to confirm phase 3, and why I believe phase 3 is still yet to come. And so just give me a minute here, getting some settings off screen, of course, for my live stream that I have to do here. Just give me about 10 seconds and we'll get rolling once again. Just have to adjust the setting here. All right, awesome, there we go. And if you have any comments, please leave them below. So the path to alt season. Of course, we start with Bitcoin year, and Bitcoin, it always precedes the pumps before we get the alt season rotation. I'm actually going to take off the moving averages to make this simpler right now. So from the bottom of the 2017 cycle, which started in 2015, from the bottom to the top, alts overall did not perform well. We didn't get alt season until right after the very top. We can even see if we overlay Ethereum, this is the number one altcoin out there. If we overlay Ethereum, you can see, yes, it performed decently, and this is the very top altcoin, but it really didn't go parabolic until after the Bitcoin top. And that is when we see phase 2 finish off, and then phase 3 and 4 really take off. Okay, so during 2017, we didn't really see phase 3 and phase 4 until right here. Now, last cycle, we had quantitative easing start in 2019, and we had money printing and stimulus checks and all that sort of fun stuff. And the 4-year cycle top, or alt season, came a little bit earlier. Now, we did get the classic 4-year cycle top, and before the halving, we even got another all-time high. We'll get into that more in a little bit. But Bitcoin overall, it performed pretty well from the bottom. You can see we had that mid-cycle top, a little bit of a drawback into COVID, reset itself, and then it just went parabolic. Now, again, looking at Ethereum was pretty stagnant until about this time right here. Now, in 2020, late 2020, you might ask yourself, what caused Ethereum to take off? Well, Bitcoin was just getting above its former all-time highs here in 2017. Once it did that, then Ethereum followed suit. But I want you to look yet again from the top here that we had for Bitcoin in April 21. Look where the top of Ethereum is. All right. Now, so far this cycle, Bitcoin and Ethereum, they've been moving pretty lockstep with each other. And you see, this is what happens until about the very end. Now, even last cycle, Bitcoin overperformed Ethereum or outperformed it for the most part until the very end. And you can see the same thing in 2017. Bitcoin was outperforming it pretty much until the very end. So the reason I bring this all up or walk you through it is that's what Bitcoin year looks like. Bitcoin year lasts until it tops, until it's too expensive to keep buying. Now we have Ethereum phase 2. And in your mind, I want you to picture these phases as running together or running concurrently. Bitcoin, we can have Bitcoin year or phase 1 while we have phase 2, right? We could even have phase 1 while we have phase 3 for a little bit. But what we have never seen, the last 2 cycles, we've never seen phase 1 while we've had phase 4. Even phase 3 overall, the large caps overall do not pump until right after Bitcoin tops, and it's too expensive to keep buying. So imagine, if you will, phase 1 ending somewhere in the middle of right here, somewhere in phase 3. All right, so let's move on to phase 2. We know that Bitcoin's been outperforming. We can see that reflected in, let's take Ethereum's chart off here. We can see that reflected in Bitcoin dominance. All right, Bitcoin dominance has overall been bullish, even though it has shown some weakness lately, getting a little bit of a red weekly candle. But overall, this means that 60% of all money in crypto is in Bitcoin. So Bitcoin outperforming pretty much the entire market. We saw that happen last cycle. And then in 2017, even on the way down, as many altcoins were being created, Bitcoin dominance still had those moments where it went up until we had that rotation, until Bitcoin topped. Let me just show you this one more time. You see how Bitcoin tops, okay? Bitcoin's in the background, it tops with dominance, okay? Bitcoin topped with dominance right in here, and then we had the rotation. Right now, Bitcoin's going up, and dominance is going up overall, right? Great. Well, getting into phase 2, what we need to see is Ethereum start to outperform. And recently, we saw Ethereum doing pretty well from this low here at around 1,600. Now, when we go to the monthly chart, this is one reason I love moving averages, is that we saw Ethereum tag the 100-month moving average, that's this light blue line, almost perfectly. So right here, you know, when Ethereum had that flush, hit that 100-month moving average, it's been bullish for a while. We've had 1, 2, 3, 4, 5, 6, half a year up. Now we have a sell signal for Ethereum, and it's testing the 20-month moving average as well as a 382 pullback. So zooming in even on the weekly, I hope you guys can see that microfib here. Let me extend it out just a little bit. You can see Ethereum tagged that 382 right here at 30.43, and the 100 week moving average is up there as well. Currently, Ethereum is at its macro 786. That's where we go from high to low. And so Ethereum is getting a pullback. And this is normal for any stock, any crypto, even when they do very well. You know, we can have a few months very positive in a row and then, you know, chop down a little bit. So this has been a very nice impulsive move. And right here, I think it's more of a corrective move. Now, when we go to our favorite phase 2 chart, right here, and we take a look at Ethereum paired against Bitcoin, what do you notice? From this low, Ethereum has been outperforming Bitcoin. And I have on this Fibonacci retracement from these highs, and I went from this high right here. We did have this extra wick. We had an extra wick down there as well. And I included that high because when we line up with the trend line, the lower highs from this prior cycle, we can see it lines up pretty well with that first high. So that's where I drew my fib from. And there's no question about it. Ethereum is moving positively against Bitcoin, and that we are in phase 2. Now, putting on the moving averages, we can see the orange moving average. Okay, this is a 50-week. When you're above the 50-week, you are bullish. Now, Ethereum last cycle, it challenged a 50-week a few times, and it got rejected, and then finally it broke through. Once it broke through, you can see, by the way, how it took the 20-week all the way down. Once it broke through, pretty much never gave it up until late 2020. Again, earlier in the video, I mentioned how late 2020, that was the time when Bitcoin was just getting past its former all-time highs. So, right when Bitcoin is getting past former all-time highs, it started to shoot up pretty fast, faster than Ethereum. Again, it doesn't mean that Ethereum's doing bad per se, but it means Bitcoin's doing better than Ethereum at that moment. And so ever since then, really it lost support for a little bit, tested the 236 and shot up to the 0.25, got rejected, and then on we went to alt season. Alt season was right here. We can even take a look at Ethereum in the background, and we can see, this is where Ethereum pumped. Of course it did, because it's Ethereum paired against Bitcoin. So the cycle before 2017, we don't have the moving averages as much, but what I will have you notice is that Ethereum paired against Bitcoin, look where it bottomed. Look at that date. It was early December 2017, early mid-December, and then we got alt season, pretty much out of nowhere. So we had phase 2 doing well over the course of phase 1 with Bitcoin, and the cycle before phase 2 pretty much just came within a month at the end. Bitcoin topped in mid-December. So, phase 2, really when we go back to 2017, phase 2 practically didn't start until Bitcoin topped. Now, last cycle was different. Phase 2 ran with phase 1. Okay, Ethereum ran with Bitcoin. And so I wonder, what are we going to see with the phases this time around? Now, so far, we are still, for all intents and purposes, still in Bitcoin season, and Ethereum clearly is bullish against that of Bitcoin. Now, it is coming back down to some key supports. The 50 and the 382, staying above those is bullish. But I will have you note that last cycle, when Ethereum Bitcoin got up to that 0.25, that 0.5 fib at 0.25, that means 25%. Ethereum was 25% that of Bitcoin. It went down all the way to the 236 fib. So, something to keep in mind here is that if we see a similar pattern play out, then we could see Ethereum Bitcoin even get a little bit lower. Now, there's good moving average support here. There's good fib support. I know a lot of people are calling for Bitcoin dominance to go higher. Now, guys, something I find myself saying more lately is that you have to take the market that you're given, the data that you're given, not the one that you want. Okay, so being good data analysts, letting good field evidence and data lead our decisions, like the good scientists and psychologists that we are, we don't have any indication quite yet that Bitcoin dominance has to go up, that it has to break this resistance. So right now, Bitcoin dominance, it is holding resistance at the 50-week moving average and the 20, and it's possible this could be the top for Bitcoin dominance for a bit. Now, when it comes to buying and selling stocks, I take the levels as they come. You don't always want to get caught always doing predictions and stuff. So, there's nothing to say that it has to go up further. This could very well be the top. Now, if we do break these supports, right, or areas of resistance and make them into support, then yes, we'll take these next levels, probably, I think by 2%, 62, 64, 66, those seem to be the next key areas where Bitcoin dominance can encounter resistance. But for all intents and purposes, I think where it is right now, even when you look horizontally, resistance, support, you could draw a horizontal trend line here. Moving averages, that's pretty promising. And we've been even looking at the MACD as far as momentum and noticing how, the MACD shows you the trend. Okay, this was showing us bullish divergence for Bitcoin dominance. All right. This was showing us, look at the direction of the moving averages. This was showing us bearish divergence for Bitcoin dominance. You see that overall direction of the blue and orange lines there. Okay, so right now, what is the direction? Well, it was down. We came up again, but this was a lower high. And now for the first time, Bitcoin dominance MACD has crossed negative. So I've been saying that, yes, this can curl up a little bit. But if Bitcoin dominance shows structure here and curls up, but then starts coming down again, and we never see it break that resistance at around 60%, give or take a few decimals or a few tenths of a percent, then I feel safe to say that the trend is definitely negative. Now, inversely, when we take a look at Ethereum, Bitcoin, again, we're talking about phase two quite a bit here because that's the phase we're in. We see this massive downtrend of bearishness with ETH, Bitcoin bottoming right there. But guys, the trend's going to reverse sometime. After it bottoms, last cycle it took a while to play out. The cycle before, we don't have that data. And so I am wondering how quick this is going to curl up. Is it going to be a slow, grindy process, or is it going to take 6 months to a year? Now, right here, when I look at this chart, to me, this looks like a medium-term sort of V-shaped recovery. That's just what it looks like. It went down gradually, then steep, and it seems to recover almost as steep as well. So, if we just kind of take a current trend of what's going on here from the bottom, maybe draw it somewhere in the middle here. Maybe we are going to follow this trajectory somewhere to, I don't know, maybe March, April. Not trying to make a prediction. I'm just taking the trend and what it's giving us. And maybe this is showing us that Ethereum paired against Bitcoin is, unless we see it go down further and then we can widen our scope, then I'd say, or overall feel comfortable in saying, that in alt season, Ethereum altcoins doing well against Bitcoin would probably happen earlier next year. Now, before we get to the large caps, because we're going to be taking a look at some forward data, trying to extrapolate it. I want to bring you guys back to the rainbow chart because I've been talking more about the 4-year cycle lately. And something that I hope you see is that from each bottom to top, Bitcoin, it gets stretched out further. Again, I want you to picture one of those athletic bands, a rubber band. Each time it gets stretched a little bit further. Okay, I'm going to explain why I'm bringing all this up here because the most common theory out there that I see from people is 4-year cycle. It's 4-year cycle no matter what. And, maybe those people are right. Okay, we'll wait and see. But there are people who are 4-year cyclists no matter what. All right, and they might be right. We'll see. We don't have the benefit of hindsight or looking into the future. All right. But here is what I see right here. And by the way, the white lines are the halvings, the red lines are the cycle tops. So from the bottom to the top, I'm just showing you the data. 750 days. We're going to use round numbers. 750 days from bottom to top. Again, I want you to picture that rubber band that's stretching, and what the rainbow chart, the log regression chart, is really showing you a stretch, okay? So 750 days, and even though this is a double bottom, to me, this one was lower just by a little bit, 850 days. So we gained a day, 750 and 850. Awesome, great. From around there, bottom to top, here's where it gets tricky. You could go to the alt season top, you can say 850. You can go to the classic 4-year cycle top, you can say 1070. You can go to the top before the halving, and you can make the argument that 2024 was the cycle top because that cycle top isn't a cycle top what takes place between the halvings. But, most people would say that this was the top last cycle in November of 21. So we went from 750 to 850. We went from 850 to, I'm just going to say 1,050, okay? So we gained 100 days. We gained 200 days, okay? So you see that stretch? Let me show you again. This was 750 days, bottom to top. Bottom to top, this was 850 days. We got stretched. Picture that rubber band stretched by 100 days. Okay, this time it was 1,050 days. We got stretched by 200 extra days. Okay, so let's just go with that here. If we stay at 1,050, that is right in October. And this is why people believe in the 4-year cycle to say, you know what? Bottom to top last cycle was 1,050. Bottom to top this cycle at 1,050 was right near that Bitcoin top 4-year cycle. That's it. Again, those people might be right. Okay, there are no certainties, only probabilities. But as I've shown you with the log regression and the data, each bottom to top has been stretched more. And that is the whole point of the log regression. And this does tie into our alt season narrative. Okay, this is part of my hypothesis and what I'm going with here. And so the first cycle, bottom top, 750. We added 100 days, 850. Added 200 days, 1,050. Okay, let's work with that. What if we add 100 days to 1,050? That puts us, you see the data at the bottom. Okay, we'll just keep it down here. Let's go to 1150. That puts the top at around January of 26. Okay, that's if we just add 100 days. But remember, each cycle gets stretched more. This is if we get 100 days more than the past cycle. What about 200 days? Let's go to 1250. Well, that would put us in April, which would be a 5-year cycle from this top right here, the last time we got alt season. All right, that'd be 5 years from the alt season in 21. I'm kind of leaning towards this possibility personally. I'm leaning towards the April of 21. All right, now, so that was 200 days. Okay, ahead of 1,050. So 1,050, 1,250, 200 days. Heck, maybe you're someone that thinks, what if there's a pattern here? What if, we second cycle we added 100, third cycle we added 200. What if this cycle we add 300? Let's go to 1,350 days. That would put a top around August. Now, guys, I'm not here to make predictions. I'm here to give you data and try my best to analyze that data. And the way I interpret this is, we have very limited prior data. And with our limited prior data, whether you believe it's a trend, this would be the trend outlook, or whether you believe it's a range, that it would put us somewhere between October and August. Now, that's a pretty big range. However, what I'd say is I would put us at least past October. Okay, I'm looking January to April, because each cycle does get stretched a little bit more. Now, last cycle, bottom to top, remember, that was 1,050. So here we go, 1,050. All right, we're giving round numbers. So I'm not looking for 1,050 again. I'm looking for a little bit more of a stretch. Whether 1,250, 1,150, I don't care. There's no denying that we have this log regression. That's why Bitcoin fits so well into this. So I don't use the log regression to give predictions, but I use it to sort of give an indication of a range of where this is going. And the reason I bring this all up is because for the path to alt season to be intact, we would have to say the 4-year cycle isn't truly a 4-year cycle. All right? The 4-year cycle, it's nice and neat. And people judge from top to top or from having the top. And they say, you know what? Look at these tops, man. Look at these tops. December 2013, December 2017, that's 4 years. 3 years, 11 months. Okay, that's November 21. Look at that, man. Or you can measure from having the top, and it's probably a similar range as well. But again, I think that data is a little shallow and doesn't fit into what we've seen before. What have we seen before? We've seen this rotation, this path to alt season, and so far we have not had that play out yet. Now, on Bitcoin dominance, let me go back to the MACD. I'll show you that, we have that divergence. We've seen bearish divergence bring down dominance before. On Ethereum Bitcoin, our phase 2 cycle chart here, we had that bearish divergence that played out. Now we're flipping bullish. All right. What about phase 3 and phase 4? So phase 3, this is our large caps. If we bundle XRP, Binance, Solana, Tron, Doge, Cardano, if we bundle those together, this is what that phase 3 chart looks like. Now, for us to see all those turn bullish or get somewhat of and it's a very select group of altcoins. And let me just add, if there is a way, if any of you know a way to track the top 20 altcoins, I'd be curious about that, because there's newer altcoins, these are older ones. Altcoins do lose their value against Bitcoin over time. So I see that effect. But we have this 8-year wedge. And so I think this lines up pretty well that, should we get an alt season, we're probably going to break out of this wedge. And there's even some key moving averages here as well. The 200 week, I would assume we would challenge and break out of this wedge when we get an alt season. And these series of higher lows, by the way, when you connect them, where does that come to a conclusion? By next year. Now, wedge doesn't need to get absolutely brutally coiled. It can break out earlier. And I do wonder how early it's going to break out. But something I want you to notice is look at this MACD. This MACD, it bottomed in the trend here. And look, we have had higher lows, higher highs. The MACD is positive for our large caps right now. And when we go, that's our phase 3 part of the path to alt season. So the MACD is pulling down Bitcoin dominance, okay, which is bullish for alts. The MACD is showing bullish divergence for Ethereum. It's showing bullish divergence for phase 4. What about phase 5? What about others? Here, I would argue, okay, there was this downward trend, but look, I would say, isn't this kind of showing an ascending set of lows? Let's take a look at this here. Okay. It's going to be very sloppy, but I think it's close enough. We see these higher lows. Now, in the past, when we've started getting to alt season, pay attention to where the MACD gets to, the moving averages, we get to the positive side. Now, overall, even though this is trending up, it's only gone to the positive side, what was that, 2024? March 24, okay? There's people saying, you know what, we had a mini BS alt season early in 24, and that's it. And guys, I do think that was a mid-cycle top and a bit of a fake out. But once this MACD crosses positive and stays positive, I think that is where we are going to see many of our alts do well, possibly in April. So that is my hypothesis. That is my outlook. Again, this is phase 4. Look at this overall positive bullish trend. This is phase 3. Look at this overall positive trend. Okay, we want to stay on the positive side. This is phase 2. Okay, this is recovering very fast. And this is Bitcoin dominance. You can see finally starting to turn a little bit negative. So I add all that up. And I add in the log regression, again, where we stretch each cycle. To me, this says the cycle is going to be a little longer than people expect. And that alt season, our charts are showing that it's still very much possible. The strength and the momentum is macro-wise going in the right direction for the right charts. Nothing is broken yet. Nothing is broken yet or saying, you know what, we are not getting a 4-year cycle. Now, for the 4-year cyclists, if anyone's bearish and you believe a 4-year cycle, and you can, I'm open to disagreements here and I want to see good data. We have not had a break of that data yet. We have not had anything to say that's not going to happen. Now, if Bitcoin dominance never comes down, let's add on the moving averages here. Bitcoin dominance never starts chopping down this way, and it just continues to keep making higher highs, then I'll be concerned, right? If Ethereum Bitcoin all of a sudden dies from here and puts in another lower low, then yes, we can say all you 4-year cyclists are correct. If our large cap giant wedge all of a sudden breaks down, and wedges, they break up or down very strong one way or the other, then yeah, those are a lot of good indicators. Others dash Bitcoin too. This one could break down further. If that happens, then that is a win for the 4-year cyclist people. No alt season, those people are correct. But, the most common argument I see out there for the 4-year cyclist is people say, you know what, we're in a bubble. And I agree with you. We are in a bubble. We are in a massive bubble with the S&P 500, with the markets. Now, crypto has so far underperformed as far as the bubble is concerned. Let's go to, I want to take a look at the NASDAQ. I saw someone make this comparison. Here we go. I think that'll have to work. And it was comparing the NASDAQ to Bitcoin and how Bitcoin, how they're kind of correlated, and Bitcoin, you could see underperforming the NASDAQ a little bit. Just a comparison I saw recently. I thought that was kind of cool. Now, with all that being said, if you believe, yes, we are in a bubble, and again, I agree with you, I'll bring you to this. Okay, this is the S&P 500 Shiller P ratio. We were in a bubble in the dot-com era too, 99, late 98, 99. We even had a massive drawdown, very similar to our tariff scare in April. Pretty much the same measured move as well. Even though we were in a bubble during that time, the S&P still went up for another year. Actually, it went up for 400 days by the time it hit 40 on the Shiller P. The Shiller P is insanely high right now. Okay, we may have a lost decade as far as investing goes. So do be careful. But by the time we hit 40 on the Shiller PE, which was December 98, early 99, depending how you look at it, I'll go here and show you so you don't have to trust me, bro, on it. Okay, here's that similar tariff scare. Where is February 99? Right here. Okay, this is when we were hitting 40, over 40 in the Shiller PE. The S&P still had 400 days and 25% up. Okay, we have very similar price action today. Hit the 100 week. Okay, and if we were to hit or get somewhere around 400 days and 25% up, I have to do this. If we were to get 25%, oh my God, can you imagine? Let's go 400 days. Okay, we're talking about an S&P up to this 2618 macro fib, 8,000 S&P, another 25% up. Seems unbelievable. And some of you are like, that is not going to happen. That's what people thought back in 1999 into 2000 as well. The market stayed bullish, even though people knew it was a bubble. And by the way, I was there. People knew it was a bubble back here. And it kept going. So you've probably heard the expression, markets can remain irrational longer than you can remain solvent. I don't blame people for taking profits. But I see the similarities, and we are in the end of a secular bull run. And I see time left in the market. And I see the log regression stretching our cycles. Again, picture the band stretching. And I don't see any of our charts or indicators broken. Actually, I see the indicators going in the right direction. Again, we have the MACD pulling this in the right direction. What about, this is, I hope I clicked the right one. Good, RSI. How about the RSI? Look at that massive downtrend. So I would say these are heading in the right direction. Look at that RSI getting oversold. Let's go out to the monthly. Okay. We just crossed negative right here. So I would kind of look at last cycle, okay? When we crossed under that yellow moving average, we challenged it again and then died to alt season. I think we're kind of doing the same. We might see a challenge again and then die to alt season. And even other strength indicators would probably agree with that. Yeah, here's the stochastic. Double bottom there, stochastic double bottom here. It's had a bottom. So maybe, I don't know if it's going to be a mini one, a big one, but it does look like it wants to come up a little bit, double bottom again. So I think there's a lot to show that strength is moving in the right direction for our charts, for our path to alt season. That's what the log regression is for. And you don't have to like the rainbow chart, but the data clearly shows bottom to top, we get stretched more each cycle. We just hit the bottom to top comparison from last cycle. In the first cycle is shorter than the one in 2017. So I expect this time to be a little longer as well. That's what the log regression shows us. The momentum is heading in the right direction, and our charts, our data is not broken yet. Let me get to some comments here. I wanted to do a shorter live stream today. You can check this chart later, man. Others dash Bitcoin, USDT, divided by copper, divided by gold. You share some interesting charts. I'm going to try this, see if I get it right. Others dash Bitcoin, right, divided by, and then you bracketed this copper divided by gold. I don't think I've ever charted this one. Let's take a look at this. All right, what am I looking at here? I'm analyzing this for the first time. The immediate thing I want to do is overlay Bitcoin, see the correlation, if there is one. Let's go to the weekly. All right. All right, so there does seem to be a correlation here. So far, this has been macro negative. But what I would say, I left the MACD up. We have not seen the similarities and strengths. And we've had the 3 MACD pumps, with Bitcoin as well. And this kind of reflects it too, that the 3 MACD pumps haven't been anything great. So I got to chew on this one. But to me, this would say, when this is going bearish, that kind of brings us to the lows. This chart that you have. That's kind of how I interpret it. Bailey Miley, I'm bleeding. Well, get a Band-Aid. I hope you're doing okay. I sold Stellar Lumens Doge and some XRP for nice gains. Congrats. Rolled it into dumb things like Jasmine and Pepe thinking alt season was coming. Yeah, you're not the first one to do that. Be very careful with the rotation plays, because as you descend the market cap ladder, the risk increases. Okay, and so whatever altcoins you're looking into, and by the way, Jasmine is one. It's an educated gamble for me. What I've seen before. Look at that MACD, how negative it is. I'm going to go to a dead project altcoin and just show you something I look for on the MACD. Okay, 2017, there it is. I look for the MACD to get into the positive territory. Once the overall MACD trend is getting positive, staying positive, and breaking above moving averages that have been historically bearish, again, I'm not telling you to buy DNT, okay? It's a dead project. Once that's happening, I'm like, oh boy, here we go. So going back to Jasmine, this is an overall negative trend. If the MACD is down here, even when it flips up, you're taking a risk. Okay. Now right here, I might pick up some Jasmine at this 1/9 of a cent, just as a dollar cost averager. But if Jasmine starts to cross up, look at the moving average with the MACD. If it starts to cross up, okay, and break these areas of resistance, I'd say they're at about 1.7, 1.8 cents, then you would be looking better if this is an altcoin that's going to do well. So, yeah, good luck with that. Those altcoins, those low cap altcoins, those meme coins, we are not there yet, okay? I would even say, let's go to this. I talked about ETH Bitcoin before. The altcoins really didn't start exploding until ETH Bitcoin was kind of getting above the 0.25 towards the 0.3, just for reference. And so, we were expecting some resistance here. We got it. As ETH Bitcoin gets above the 0.5 next time, again, look at your individual charts, see what they're doing momentum-wise, price-wise, and that might be a better time to do that. So, sorry you lost some money there. Congrats on making money off those other ones, and best of luck. New Jimsy in my analysis, all points towards the March-April time, strangely. Yeah, I'm kind of with you there on the March-April thing. Bay Miley, fortunes are made by buying low and selling too soon. Can you name me? Fortunes are made by buying low and selling too soon. Someone said Rothschild. I was gonna guess Buffett, because that guy he's known for leaving the markets before bubbles play out, and he's right in the long run. He'll be a couple of years early, but to that point, I think nowhere reflects it better than crypto. Let's even go to some of our mining stocks. Here's the top for the mining stocks. Look at that, November 2017. This is Mara. Got the 40. And then by March, so just a few months, it died like 90%. Is at $4.50. Similarly, there's Mara topping there at 80. And then that was November 21. And then in January, just a couple months later, went down 75%. So yes, selling into the pump. If you sell here, like if you bought Mara down here at $1 and you see it start to go sideways, and you did a 20x inside of half a year, take profits. It'd be dumb not to. Okay, even if you don't sell it all the way at the top. Now, that's why I look at fibs. I look at sell signals because I'm a little bit greedier than most. But I agree with you on that. That selling too soon is better than too late, especially in the crypto world. Anyways, guys, I'm going to let you go. Just wanted to keep it short and sweet for today. Thank you so much for coming along. Just wanted to share my hypothesis, the data, and where I believe this is headed. And we'll see if I'm right. I could be wrong. I've gotten some good profits from the Bitcoin mining stock so far, but I believe there's still higher to go. I really do. Hopefully I'm not wrong. Hopefully there's more money left to be made for us. But I'll leave you with this. Okay. Volatility is vitality. Look at where the volatility levels have been. The lows were at 20 and the highs were in the 30s. That is very volatile. So even if we are getting a similar play out as the dot-com bubble, as I showed you before, if that's what we're in store for, which I believe we are, we're about to see very high volatility. That'll bring vitality, life to the markets, and it is going to get crazy. And, let me just say, when it comes to crypto, I don't know how many of you have been here since 2017 like me. It gets crazy. And just have a strategy to help you with your emotions during those very volatile times that I believe are coming. And it'll probably feel very euphoric, very short window, and you got to be ready to take action in your strategy. Let your strategy and data and charting lead the way, not your emotions. That is my best lesson I think I can pass on as a market psychologist, if you will. So thank you so much for watching, guys. Have a wonderful day. Take care.